Hi everyone, in this video I'm going to discuss with you a multi-bagger monopoly stock that has literally smashed many records on BSE exchange. I'm talking about EKI Energy Services Limited. Have a look at this chart. You will see that in January 22, the prices of this share was 12,000 plus rupees. And just to put this in context, when the IPO of this stock came out in March 2021, it was only listed for 140 rupees on BSE SME exchange. Within less than 1 year of time, the price has shot up from 140 rupees to 12,000 plus rupees in January 2022. If you invested 1 lakh rupees in this share's IPO in March 2021, by January 2022, your 1 lakh rupees would have gone up to 88 lakh rupees. That is some insane return. That is crazy. That is absolutely insane. The natural question is why the prices of their shares have touched the roof. Is there a scam going on here? Is there something else going on here? The simple answer is, if I look at their revenues and profits within 1 year, have a look at this here and you will see that their revenues from 21 to 22 have gone up by almost 843%. Look at their profits before tax and after tax. They have gone up by nearly 2000%. The second natural question is why this company has made huge profits. And the answer lies in the fact that the global demand for carbon credits in 2021 has gone up really high. Have a look at this. Apple, for example, declared that by 2030, Apple wants to be carbon neutral. Okay, fun fact for you, one iPhone, for example, releases 72 kgs of carbon dioxide throughout its life, right? Look at Microsoft. Microsoft announced in 2021 that they're buying up to 2 million worth of carbon credits. Again in 2022, they are again buying more and more carbon credits and trying to be carbon neutral. Look at a long list of here. They are all trying to be carbon neutral by specific targets. For example, Google wants to be carbon neutral by 2030. Amazon wants to be carbon neutral by 2040. Not only the companies, even every country has set up a target. So for example, Sweden, Portugal, they have set up a target to be carbon neutral by 2045. Japan, UK, they have set up a target to be carbon neutral by 2050. Let me now very quickly explain to you the concept of carbon credit and why companies like EKI Energy are minting crores of rupees in this business. Okay, so have a look at this chart. What you see there is there are two companies here. Let us say the company in red is Apple. Okay, now every company is given a target above which they can't really emit the carbon dioxide and other greenhouse gases. Every company will end up emitting some limit of carbon dioxide, methane, all these gases when they are doing production of their products or they're shipping their products from one place to another, right? In this example, you see there is a red line there, and if a company emits more than this defined limit, which is defined by sometimes regulators, sometimes companies are setting targets by themselves, they will have to actually go ahead and buy the carbon credit, right? Because they are emitting more than their excess. Have a look at company B here, which is doing really well in terms of emission. They have brought down their carbon dioxide or other greenhouse emission to a lower level than the limit. So they have this bank of carbon credits. What they can do is either they can sell it off in a market or they can keep it for their future reference. Either ways, company A here, for example, Apple in this example, will have to go and buy some carbon credits from somewhere to be able to compensate for that excess. That is one type of carbon trading that is likely to happen. The second example that I want to give you is, for example, Microsoft. Have a look at this here. You will see that Microsoft, for example, have invested in multiple projects such as forestry, where simply put, people are planting trees, and if you plant trees, what trees will do is they will absorb the carbon dioxide. Therefore, they are eligible for earning carbon credits, and there is a systematic method in which they will go and actually validate these carbon credits, and they are then selling these carbon credits to the companies. Now, EKI Energy as a company, what they are doing is they are studying all these projects like forestry, soil, biocare, and all these. They are finding these sellers who are there in the market, who are legitimately creating these carbon credits. They are connecting these sellers to the buyers, companies like Apple, Microsoft, Amazon. They have a long list of clients, and they in turn are earning profit. So they are buying these carbon credits at a lower price, and then they are selling these carbon credits to the companies at a higher price. So this is in very simplistic way a model that EKI Energy is following. If you're liking this video so far, please give it a thumbs up. It will mean a lot to me. Let us now talk about the promoters and investors in this EKI energy company, because it is very important for us to understand who has invested in this company. So, Manish Kumar Dabkara started this company back in 2011. He's a 37-year-old young man from Indore, where jalebis and pohas are sold like crazy. Okay, now he started this company back in 2011 because he used to work in a private company where he used to be the verifier and auditor of carbon credits, and he is supposed to be an expert in this area, right? He left his high paying jobs and he started this company. Okay, now this family holds more than 70% of the shares in this company. But more importantly, have a look at this. Mukul Mahavir Agrawal, who is a well-known investor, high risk, high reward, a penny stock buyer, and who's converted and who's had multi-bagger stocks in his bucket, he has invested in this company from June 2021. And you can see here that he's still invested in this company. In fact, he did not sell his stakes while the prices were 12,000 plus rupees in Jan 2022. In fact, he carried on investing more and more money into this stock, and you can clearly see how his investment have gone up in last 1 year. If you look at the fundamentals of this company, you can clearly see that the top line of this company has been growing steadily. In fact, it has grown very good in the last 1 year. If you look at the bottom line, the company's profits have grown again at a very, very good rate. So from a top line and bottom line perspective, all looks good to me. If you look at the ROE percentage, return on equity, then you can clearly see they have given impressive ROE percentage in the last 5 years. Looking at the PE ratio of the company is 17.23, which is not too high at the minute, and it has a potential to go up to 30 to 35 in the coming years as this company transitions from the small cap potentially to the mid cap company. Looking at the PB ratio, yes, it is slightly higher side. It is slightly concerning that the PB ratio is slightly higher, but because of the return on equity being higher, it is not a massive concern. But yes, there is a slight concern in terms of the PB ratio being higher for a small cap company. One of the very important consideration for small cap companies is their ability to pay the short-term debt. So we need to really check their current ratio, quick ratio, and all of these liquidity ratios. Have a look at this here for EKI Energy. In the last 5 years, their current ratio has gone up, which is really good sign. What it simply means is that they are able to pay all their short-term liabilities using their current assets, which is really great. This tells us that the company is not going to go bankrupt because of the limited assets available to be able to pay their liabilities, which is a good signal. Let's look at the quick ratio. Again, from a quick ratio perspective, they are doing well. The company has the liquidity, cash flow is good. There is very little debt the company is carrying. In terms of its share prices, from January 2022, the prices were at really peak, 12,000 plus was the share price. It has corrected by 40 to 50%, and roughly it has come to 7,000 levels. But in the last 2 or 3 days, they have split the shares. They announced that they are going to give 1 to 3 ratio of split shares. That is why the prices have come down to 2,400 level. And this is where more and more public can go and buy, and it becomes more affordable share as such. What about their future plans? Can they really keep this momentum going or not? That is the key question for us to consider. Okay, and there are 3 points that I want to make on this point. Okay, number one is that they have recently registered King International as a Singapore-based company. So they are going global. They already exist in countries such as Vietnam, Indonesia, Philippines, because remember, carbon credit is a market that is a global market. If a company can start their operations globally, they're able to go and get the sellers and buyers and match them, and through that trade earn a lot of money, right? So that way the company is already going global and they are already opening more offices, which is a great start. Point number 2 is that very recently Shell and EKI Energy have created a joint venture where 51% of that joint venture is owned by EKI Energy and 49% by Shell, and Shell is investing $1.6 billion into that JV to create nature-based solutions in India and across. What that is going to do is that is going to create carbon credits in the next 5 years, which Shell can utilize. And again, EKI is providing consulting services into that area, which is really, really good. Having Shell as a partner, a very well-known brand globally, actually brings a lot of credibility at a global forum for EKI, which is another really good step that the company has taken, right? The third point is that is this company able to generate carbon credits themselves or not? That is very important factor for their future growth. Okay, for this, what they have done is they have floated a new company which is going to manufacture the cook stoves, right? Now these cook stoves are very different and unique in the way that they do not emit any carbon dioxide gases or methane gases, which are very bad for environment. Now till date, they have already produce 80,000 cook stoves, and what they are going to do is they are going to give it for free to people in India, and that is how they are going to generate carbon credits for their company, which they can use to sell in the voluntary carbon credit market and earn a lot of money. In terms of the threats for the company's growth, number one is the regulation, right? Regulations can keep changing, and there may be some stop on voluntary credit market in short term or medium term. That might impact companies' profitability. That is number one. Number two is that there might be new aggregators that might come into this market where they might facilitate the trade between the buyer and seller. So they might have some competition in the near term. But again, because these companies already established themselves, they will be likely to be more ahead into the game. Now the $1 million question, whether you should invest in EKI Energy or not right now. Okay. Now, of course, I cannot give you any investment advice because I am not registered investment advisor at all. So please do your research and do your own investment. This is a very high risk and high reward sort of a share. You might lose all your money if you invest in this. You might get great returns if you invest in this money. My current private position is that I am going to invest in this company. What I am going to do is invest 25,000 rupees now and invest remaining 75,000 rupees in the next 6 to 8 months slowly, as the markets are right now falling and they are correcting. So I would like to take that advantage. But again, please do not take this as an investment advice at all. This is my personal analysis that I've done. Because I've done this analysis, I wanted to share it with you. And if you liked it, please give this video a thumbs up and subscribe to my YouTube channel, because I'll bring more and more content on finance and career. Until then, see you. Have a great day.